Welcome back to the Dong Report, where we cover the earnings of Realty Income, ticker symbol O. Show me your O face. Occidental Petroleum, Oxy. Give me that Oxy, baby. It makes me feel so good. And of course, DraftKings, or as I like to call it, DraftKings. So let's dive right into the earnings. The first on the deck is Realty Income, our favorite dividend portfolio. So let's see what happened to Realty Income. Down 0.5% today, and then up 0.31% in the aftermarket. How's old O doing? Been doing? How much you want to bet the entire dividend community has now given up on O because it didn't go up a lot? How did I know that? All right, so let's see what their earnings were. Real estate partner to the world's leading companies. Sainsbury's, that's English, Encore, looks like Vegas, and Lifetime Athletic. All right. 81 billion enterprise value, 5.17 billion of annualized rent, credit ratings of A3, A- by Moody's and S&P, 56 years of operating history, 15,606 commercial real estate properties, and massively underperformed VT. And 34% of rent from investment-grade clients. Okay. Diversified real estate portfolio. 346 million square feet of leasable space. 1,630 clients in 91 industries. Very diversified. And of course, the only thing that people care about is strong dividend track record with a compounded annual growth rate, of 4.2% from 1994 to 2024. That's kind of low when you compare it to earnings growth of some of the larger companies in the index. 661 monthly dividends declared, 111 consecutive quarterly increases, and an S&P 500 Dividend Aristocrats Index. So they're selling all the amazing things that they're doing. They're very diversified, and they've grown their dividend at 4.2% compounded since 1994. Not very good. Okay, in my humble opinion. All right. What do? They invested $1.2 billion at an initial weighted average cash yield of 7.2%. Wow. Including $889 million deployed in Europa at an initial weighted average cash yield of 7.3%. Okay, I don't know how they calculate that number, but that seems like a lower yield, especially compared to the returns of the stock market and the earnings growth of a lot of companies at the top of the index. All right. Sourced $43 billion of volume in the second quarter, which matches the volume from all of 2024 and the highest quarterly volume in the company's history. Delivered strong operational metrics, including quarter-end occupancy of 98.6%. That's good. And a rent recapture rate across 346 leases of 103%. Okay. Remaining active in our approach to optimize the portfolio. Blah, 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 blah. And maintained ample liquidity of $5.1 billion with manageable debt maturities through 2026. What about 2027? All right. Okay, they increased some volumes. For the year, we now expect AFFO, adjusted funds from operations. It's basically kind of like a REIT's operating cash flow in the range of 4.24 to 4.28 for the full year. All right, so I want to see growth rates. Same store rent growth, 1%. Cash G&A expenses, 3% of... Show me some freaking numbers, okay? Okay, so they're showing their dividend yield, and they're showing their historical average total operational return. That is 100% irrelevant. You can show us all these charts you want, but the last 5 years, you've sucked. Now, obviously, they've had a positive return because this is just share price movement. This is not total return. Total return includes the dividend, and this drops by the amount of the dividend. So they've had positive returns, obviously, in the last 5 years, but they have not been stellar compared to the market as a whole. That's the price you paid for those juicy dividends. Okay. Let's see. Industry diversification, 10% in groceries, 9% in convenience stores. Okay, I mean, they're pretty diversified. 82% of their stores based on rent is in the United States, 13% in the land of Willy Wonka, and 3.7% in continental Europa. All right, what's their largest holder? 7-Eleven. I'm actually a fan of 7-Eleven. That's my favorite gas station. Dollar General, I don't go there. Walgreens, uh-oh. Dollar Tree, Lifetime Fitness, Wynn Resorts. Okay, they're diversified. I like it. All right, on average, 99.6% of our portfolio has been unaffected by credit losses. So basically, we have very high-quality people that rent from us. Historically stable cash flows. Wow. I mean, I don't really see, like... Can I see some numbers? I want some real numbers. What's this? Realty Income's external growth opportunities are broad and diverse. Oh, they're diverse. Investment volume. And their investment volume has really dropped down. I guess they're not really identifying a lot of good properties to invest in. You can see they had a huge boom in investments, 2021, 2022, 2023, and then it just completely fell off a cliff. Okay. This is just like where are the financial statements? Europe. Oh, Europe. We're going to grow in Europe, bro. Europe stocks, bro. Private capital. Private fund. Operate an infinite life open-ended fund. Focus on net lease properties in the U.S. Target institutional investors. Maintain a meaningful co-investment in the fund. Reduce seed portfolio. Seed. You like the seed, boys? Over time. Wow. Yeah. I'm not very impressed. Okay, what's the balance sheet like? Current debt maturity profile. So in 2025, they have $949 million of debt coming due. In 2026, they have $3.5 billion of debt coming due. In 2027, they have $4.1 billion of debt coming due, of which about 33% is unsecured notes, pretty big revolving debt, a term loan, and some English debt, pound-denominated notes. So they got some big debt maturities coming in the next couple of years. Huge increase from this year. But I guess they could pay it off, huh? All right. Appendix. Let's see. Diluted adjusted funds from operations. Is that what that means? I think that's what that means. So AFFO is apparently like the real estate metric you should focus on. How much has that grown by? It's grown by 3%. Wow, that's some explosive growth in cash flows. AFFO per common share is actually down by 1 cent year over year. So you buy a share, and if you bought a share 3 months ago, you got 1 cent of adjusted funds from operations, or whatever the frickin' term is. Adjusted funds from operations. Wow. So you pay, how much did you pay? $52, and in 3 months I give you $1. I mean, that's okay. It's cool. All right, so that's O's. I mean, really nothing crazy. They've been sucking. I mean, all of real estate's been having issues. So, I mean, I guess the main thing you want to look at is they got some debt mature. They got some pretty big debt maturities coming up in the next 2 years. This year, it's really not that bad. Really no growth in their cash flows, especially in their adjusted funds from operations. It actually went down a little bit compared to last year. And they've been issuing a ton of freaking stock to, of course, buy additional properties. And then on top of that, they're really not making any huge investments in properties because, of course, the whole freaking real estate market's insane. So, yeah, times are a little crazy, okay? Long-term weighted average cost of capital, 7.2%. Okay. All right, so that is, amazing. I'm making my O face right now. All right, let's go look at Oxy. Oxy, my soxy. What's old Oxy doing? So Oxy was down 1.25%, and it's up 0.73% in the aftermarket. This is Warren Buffett's he's been scooping this up. So it's up 166% over the last 5 years because oil went bananas during the clown market. But year to date, it's down 13%. And over the past year, it's down 24%. Let's look at it from a valuation standpoint. Is it cheap, bro? Let's see. Price to operating. Look at that price to operating cash flow of 3.45. It's cheap, bruh. It's cheap. Price to free cash flow of 9. I can see why Warren Buffett likes it. Okay. Occidental announces second quarter 2025 results, announcing $950 million of additional divestitures sales since the start of the second quarter, of which approximately $370 million have been closed. Occidental has repaid $3 billion of debt year to date through a combination of asset sales, organic cash flow, and proceeds from warrants exercised. Operating cash flow of $3 billion. And operating cash flow before working capital, that's short-term assets and liabilities on the balance sheet, of $2.6 billion. Capital spending of $2 billion. Okay. Diluted earnings per share of 62 cents. And then reducing the midpoint of 2025 capital guidance by $100 million. All right. Oil and gas pre-tax income was $934 million. Excluding items affecting comparability, the decrease in second quarter oil and gas income was due to lower commodity prices. I mean, it's a cyclical thing. Oil prices, up, down, left, right, vertical line up, vertical line down. Should have bought oil in 2020. Okay. So they're saying their change in income was due to fluctuating oil prices. Shocker. OxyChem. Pre-tax income was $213 million. Income was unchanged from the first quarter of 2025. Midstream and marketing pre-tax income was $49 million. Higher gas marketing margins and transportation capacity. Okay. Let's go look at their incomes, their financial statements. Ugh, this is ugly. Ugh. I don't even want to look at this. What is this? Okay. Can we see like a regular? What is this? God. This is ugly. This is like unreadable. Okay, here we go. So, okay, second quarter 2025. So, oil and gas, I mean, you probably can't see it. I apologize. I can't zoom in because I can't read it. Basically, their oil and gas revenue quarter over quarter dipped by about 10%. Chemical revenue's up a little bit, maybe 5-10%. Midstream and marketing revenue is up 100%. Then they have some intercompany eliminations. Total revenue is down quarter over quarter and year over year. Let's see. Total expenses are actually up. So their revenues are down year over year and their total operating expenses are up year over year. Okay. Yeah, earnings. Oh, look at that. Earnings per share. Horrible. So last year they were posting some pretty good EPS up until the fourth quarter. This year, 26 cents for this most recent quarter. Yeah, this ain't too pretty. Ugh. I guess Warren Buffett is cheap, bruh. I don't know. Did they buy back any? God, this is so hard to read. Okay, there have been no stock buybacks for 3 quarters. Yeah, they've been issuing stock a little bit. Yeah, no stock buybacks. What's the dividend? Okay. Yeah, they've been aggressively paying down long-term debt. They paid $1.7 billion of long-term debt this quarter. Cash dividends. They increased them. They paid $398 million of cash dividends this most recent quarter. And then they issued $906 million of stock. Yeah. It's an oil play. I don't know what to say. I mean, this is the ugliest freaking thing. Yeah, they got cooked by oil prices. I mean, you could see the price of a barrel of oil for that quarter was the second quarter was $62. I mean, you're just basically playing oil. That's all I can really say about this. Okay. That was the most boring company I've ever read in my life. But it's Warren Buffett stock. All right, DraftKings. I'm a Kang. So it's up 6% after hours. I remember this company being a freaking degenerate turd. So, of course, revenue's been exploding. Of course, because everybody's freaking gambling now. The whole country is just one giant gambling parlor. Stock market, sports, everything's a gamble now. So revenue's been growing precipitously. Let's go look at the most recent revenue. So last quarter it was 1.4 billion. This quarter, the revenue was 1.5 billion. So they grew their revenue by over 100 million in a single quarter. DraftKings reports revenue growth of 37%. Guys, just gamble. You'll make so much money. No, the company will make a lot of money. Huh? All right, so revenue grew 37% year over year. The revenue was driven primarily by continued healthy customer engagement, translation, gambling, efficient acquisition of new customers, higher structural sportsbook hold percentage, and sportsbook-friendly outcomes. Net income of $158 million. When do they actually turn profitable? Wow. So they've only been profitable one quarter in the last 5 years, and they finally turned a profit again. How cute. Okay. So what's that profit margin? 1%? Hold on a minute. Or is it 10%? I'm being stupid. 10% profit margin. Okay. We got a profit. Oh, finally. Who's texting me? All right. Monthly unique payers increased to 3.3 million. 3.3 million average monthly unique paying customers. An increase of 6%. So their revenues, basically they have a small increase in customers, but they're gambling more. Average revenue per user increased to $151. They're making $151 per freaking user, an increase of 29%. Fiscal year 2025 guidance. It's maintaining its fiscal year 2025 revenue guidance of 6.2 to 6.4 billion. The company is on track to deliver revenue closer to the high end of this range due to sportsbook-friendly outcome. Yeah, we're a gambling clown market. The revenue guidance equates to a 32% year-over-year growth based on the company's fiscal year revenue. Okay. God. DraftKings is live with mobile sports betting in 25 states and DC, which represent 49% of the U.S. population. They expect to launch its sportsbook product in Missouri, pending market access, licensure, regulatory approvals, and contract. No, deny it. DraftKings is also live with iGaming in 5 states, which represents 11% of the population. And they're also in Ontario, Canada, which is 40% of Canada's population. I guess that area. Okay, what's their balance sheet look like? So they got 1.2 billion of cash. That's a lot of cash. 1.7 billion of current assets, 1.3 billion of long-term assets or short-term debts. They got a lot of goodwill on the balance sheet. Most of their long-term assets are intangibles from acquisitions and, trademarks, patents, et cetera, et cetera. So term B loan. Okay, they took out a $578 million loan. I'm sure their interest rate's so low. Yeah, on the short end of the balance sheet, not too bad. On the long end, I don't like the setup. They have real debt, but most of their long-term assets are intangible. You can't touch them. So okay. Treasury stock, man, they did some buybacks. Look at that. They bought back what, 300, they spent $350 million on buybacks. Wow. All right. So obviously they're improving their margin. So they grew revenue pretty precipitously. They kind of controlled sales and marketing, product and technology. They didn't really grow that much. General and admin, they barely grew at all, if basically immaterial. Look at that interest. Look at that increase in interest expense. So because of that debt, they're now paying $11 million in interest expense. Brutal. But they can clearly pay it. I mean, they had $150 million of operating income. So roughly less than 10% of their operating income is consumed by interest. Okay. EPS, 32 cents per share. God. What a clown company. Oh, they have positive operating cash flow. That's adorable. Let's see. What did they do? Yeah, they bought back about $350 million of stock, but they borrowed $588 million of debt. Wow. Very, very shocking and impressive. When's the last time have they actually been cash flow positive? Yeah, kind of all over the place. So that's DraftKings for you. What's the stock price done? Should be going up massively. It's gambling clown market time. All right, let's do some comments, and then we're on to the final video. So once again, YouTube wants to tell us that we have a new member. Welcome. If you want me to answer your questions, you need to become a member. And oh, by the way, here's all my CPA services. If you click the link at the conclusion of this video in the pinned comment, you have a bookkeeping presentation, tax preparation. I'm a certified public accountant. I do business or personal taxes in any state in the United States. Free 30-minute consultation. We can do tax planning. We can talk about the next tax season that's coming up very soon. I do sponsored videos, $50 a pop. You can talk to me one-on-one. I got a book, Stop Being a Broke Loser, and there's a free Discord, completely free, that you can join. Click the pinned comment at the conclusion of this live stream or the pinned comment in the live stream, and you can check out all my services. And I would highly suggest you book a free 30-minute tax consultation, especially if you're self-employed. If you're self-employed and you're not paying estimated taxes, you're going to get a huge tax bill at the end of the year, and you're not going to be happy. And you're going to have penalties and interest, and you're not going to blame me because I tried to warn you in advance. All right. Let's see. Okay, somebody's calling me an arrogant coward. Are you mad that I made fun of Stockmo, you chump? Ryu, what's up?
Did Stockmo clap back at you or something? Please make a follow-up video if he did.
Yeah, I might do that today. I got one more earnings video, and then we could maybe talk about stink blow. My mom lost money listening. No, he never misses. He's a genius. YouTube is better because he's back. Apple had a good day by capitulating to Drumpf. Oh, my blowhole. OpenAI on Tuesday announced it will offer ChatGPT Enterprise to U.S. federal agencies for $1 through the rest of the year. And then it'll go up to like $1 trillion a month. All right, Microsoft has already done it since most employees already have Office. Done it with Copilot. If my employer implemented ChatGPT for us to use, would be awesome. I already use ChatGPT and Copilot. I mean, I guess I could kind of use it in accounting, but yeah. Who is this? Hold on a minute. Hold on. I thought my friend was texting me. I don't think it's him. I wonder if somebody got his old number. That's freaking weird. Okay. Yeah, my friend will never text me and say, "How was your day?" I'm like, what? Because his name popped up on the text. I'm like, hey, what's up? How was your day? Yeah, I think that's somebody's using his old number. All right, well, let's keep going. Hey, guys, let's finance. What's up, bro? How many people think Strongman has an IQ above 135? Me? I do. $2 super chat. VT is like so boring. I'm bored. I'm bored. I want to be entertained at all times. My brains are cooked by TikTok. What's a book? I never heard of a book before. Yeah, I'm a girl. Thank you for the super chat. Finance my Binance. Monthly dividend. Of course, even though it's been complete garbage. Ha 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 ha. Hitcoin my Bitcoin. I'm going to die soon. I don't have time for that. Well, put me on your will, bro. Thank you. Gamble. Hey, Strong. I'm only doing member comments. Mo wants you to publicly apologize. He says you're mean. Where did he say that? If he said that, yeah, I'll apologize, Mo, but you might not like my apology. I think I'm going to have Strongman do my taxes next year. He's probably going to laugh at my waging. I don't laugh at anybody. Even if you gamble on stocks, I just don't have time to look at all your stock trades. I'm trying to get it done. I want to continue supporting you. Damn right. I'll do a good job. Oh, the only reason I'm answering this comment is for potential business. Remixer Dark. You have to be a member if I'm going to answer your comments. I might need a CPA for 2025 because I got income, dividends, savings. The main reason you probably will need a CPA is freaking crypto. Crypto is a huge pain in the butt when it comes to tax preparation. Because what people do is they transfer between wallets, but they don't transfer their basis over. So what they'll do is they'll transfer crypto to Robinhood. They'll sell the crypto, but it'll only show the proceeds. It won't show the basis. So I actually have to go and calculate the cost basis of the crypto that you sold, because if you don't do that, the entire proceeds is a capital gain. So most of that stuff you could probably figure out yourself. When it comes to crypto, yeah. I learned that the hard way this year. Doing crypto, oh my God. I undercharge some people, man. Sean, man, is surprisingly professional on the phone. Of course I am. You better mute that phone if you want me to support your grips. Well, I saw him. I was like, my buddy texts me. It says his name and then his cell phone. I'm like, why you text? Because we always talk on Facebook. And then I said, what's up? And then he said, how was your day? I'm like, he never asked me that. It doesn't seem like something he would say. So I don't know who the heck is freaking texting me. How was your day? It was wonderful. I was very busy. Very busy. Very freaking busy. Because the Army, I'm freaking behind on stuff because I went on Army training. Some random agent, AI agent. Yeah, but they have his freaking phone number. Wagey Pay Pigs Unite. Yeah, he's back. Stock. How am I a 0, Gil? I'm always 100. Stockmo is negative 10,000. I'm going to react to stupid little video. Thank God Mo was back. What an injustice. Yeah, that was so heartbreaking. How was your day? I was like, that's not him. I was like, that's definitely not him. I sent him I sent him a snapshot of the message. I'm like, who is this? Anyway, guys, thank you for tuning in. We got one more earnings video to cover. I appreciate the new member. And thank you for the $2 super chat. And I'll see you on the next live stream in a couple of minutes.